When I first started investing, I had more ideas than money. I was eager to put my capital to work and make a profit, but I quickly realized that finding good investment opportunities wasn't as easy as I thought. I struggled to find companies that had a strong business model and a promising future. At first, I tried to diversify my portfolio by investing in a variety of industries, but this approach wasn't working for me. I eventually wound up my partnership because the market was offering nothing that met my investment criteria. It was a difficult and frustrating experience, but it taught me a valuable lesson: the importance of learning how to value a business. I realized that in order to be a successful investor, I needed to understand the financials of a company and look for certain signals that indicated if an investment was a good opportunity. One of the things I learned is that I avoid investing in technology because I don't know what the industry will look like in the future. I understand that technology is constantly changing and evolving, and trying to predict the future of a particular technology is a risky proposition. Instead, I look for businesses that have a strong, sustainable competitive advantage. A great example of this is the company Gillette. They dominate the market for razor blades because people don't often change their preferences for daily use products like shaving. Gillette has a predictable and sustainable future, which is exactly the type of company I look for when investing. Furthermore, I also pay close attention to the management of the company and their approach to running the business. I look for companies with a strong and experienced management team that has a proven track record of success. Investing is not an easy task, but with the right approach and mindset, it can be a very rewarding one. I've learned that the key to success is to understand the business and the industry, look for companies with a strong competitive advantage, and pay close attention to the management team. With these strategies in mind, I am confident that I can continue to find good investment opportunities and achieve success in the world of investing. As an investor, one of the most important things I have learned is the key to successful investing is learning how to value a business. In order to make informed decisions and identify profitable investment opportunities, it's crucial to understand a company's financials and look for certain signals that indicate a solid financial future. When looking for potential investments, I focus on companies with a clear competitive advantage, trustworthy management, and a solid financial future. I believe that these are the key factors that will determine a company's success in the long term. I also avoid highly speculative industries such as technology, where it's hard to predict the future. Instead, I prioritize investments in companies with a steady demand, such as consumer goods. One example is products like candy bars and razors. People don't often change their habits when it comes to these types of products, which makes them a reliable investment. The test of a business is how much cash it will produce over time, not whether it does something glamorous or new. Investing is about laying out money to get more money later on. It's about finding the companies that will generate a steady and consistent return on investment. Successful investing is about finding the right balance between risk and reward, and understanding the value of a business is key to making profitable investments. By focusing on companies with a clear competitive advantage, trustworthy management, and a solid financial future, and avoiding highly speculative industries, an investor can make informed decisions and achieve success in the world of investing. Investing is a game of patience and strategy, and it's all about laying out money to get more money later on. It's a way to grow your wealth over time, but it's not without its challenges. One of the most important things I've learned as an investor is that the proper temperament is more important than intellect in successful investing. Being able to stay calm and avoid getting caught up in the herd instinct in markets is crucial. It's important to be aware of the excitement and hype that can surround certain investments, and to make decisions based on your own research and analysis rather than following the crowd. Mistakes in investing are inevitable, but they can also be valuable learning experiences. It's important to be able to accept and learn from mistakes, rather than dwelling on them. The key to successful investing is to be in good businesses with good people, rather than trying to buy something cheap. Starting out with limited capital may require selling investments to fund new ones, but as capital increases, opportunities for investments may decrease. This is why it's important to have a long-term perspective and not dwell on past mistakes. I have made my fair share of mistakes in investing, such as investing in a textile business that didn't pan out as I had hoped. But I've been able to overcome those mistakes by transitioning into other successful businesses. It's important to remember that investing is not always about succeeding. It's more fun to play the game of investing with its ups and downs. It's about learning and growing as an investor and being able to adapt to the ever-changing market conditions. In conclusion, investing is a game of patience, strategy, and learning. It's important to have the proper temperament, be aware of the herd instinct in markets, and not dwell on past mistakes. By focusing on good businesses with good people and having a long-term perspective, an investor can achieve success in the world of investing.